Oil prices rebounded after a slump to $116 per barrel from $125. At the moment, oil prices are hovering around $120 per barrel. It means that the local correction finished, improving the imbalance caused by overbought conditions. In our video review, we will try to predict the future movements of the asset. In fact, the overall situation remained the same. The still existing risks of energy insecurity are keeping oil prices near the multi-year highs. Oil will lose value only if the European Union stops imposing sanctions against the Russian oil and the gas sector, thus reducing risks of an energy crisis. Until then, the output potential will remain intact. On the chart, we see that sellers became less active at the level of $115. As a result, traders received a signal that the correctional process may come to an end. A surge in the volume of long positions will occur if the price consolidates above $120.50 on the 4-hour chart. Until then, there is a possibility of a decline. The Bank of England meeting results spurred a sharp drop in the US dollar, thus propping up gold. The fact is that gold is a safe haven asset, and in case of the US dollar depreciation, traders will invest their funds in gold. In addition, the European macroeconomic situation is much worse than in the United States. Thus, investors need reliable assets to put in their money. Under the current conditions, part of the capital will be invested in gold. Meanwhile, gold futures returned to the limit of the earlier broken range of $1,840 and $1,870. The fact proves high speculative activity and the absence of a clear trend. Notably, the asset has every chance to hover within the mentioned range. However, judging by the news flow, gold may resume rising after an insignificant bounce. In the near future, it may climb to $1,860 per 3 ounce. As for the Russian ruble, its traders are focused on the international St. Petersburg Economic Forum. Although Deputy Prime Minister Andrei Belousov has stated that the most comfortable ruble exchange rate for the economy is 75 and 80 rubles per dollar, the situation on the foreign exchange market remains the same. The currency is still trading near 57 rubles for $1. Various officials continue emphasizing the need for a weaker ruble, but nothing has been done for this so far. All the measures taken to boost the ruble are still in force. Russia's currency is likely to trade at the current levels unless the government abolishes the requirement to sell export earnings and the Bank of Russia cuts the benchmark rate even more. Since the beginning of June, the Russian ruble has recouped all the losses caused by the recent market turmoil. The support level is located at 56 rubles per dollar. The quote is hovering around this level, and only the price settlement below 56 rubles on the daily chart may hint about a decline. Otherwise, the currency will either trade sideways or rebound. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.